Hold on 1 second.
Okay.
Okay, now you're good.
This will be slightly harder to envision because not everyone can envision the chart, but I guess today I wanted to, with the recent volatility in the blockchain indexes and asset class, everything pretty much made new lows since we last talked, and it's just today that there was some small amount of capital allocated, and oddly enough, it is. Anyone know what day of the month it is today? Second to last business day, and technically, I'd say Friday is really a Wall Street holiday, but technically it's open for partially. So again, you take a thin market, you force people out, then you're the buyer, and you've had these same patterns over and over and over. Maybe Tim or Thomas might be able to add on this in a few moments, but at 9,000, 9,500, people get really excited. Here's the problem this time. When Bitcoin goes up, everything else doesn't. When Bitcoin goes down, everything really goes down. So you have essentially these cars that are going down one-way streets, and when the large car stalls, it's not pulling them. Where everything else just continues to lose ground. That strength in the spreads thing that finally broke. I guess that's based on the Friday to Fridays, but Ethereum's Bitcoin exchange rate had its first down week, or I guess there's only a few days in, but it's becoming a one-horse race, and there just seems to be very little interest. There's not buyers on the way up, or at a much slower pace, but on the way down, they're sold more quickly than Bitcoin. So I've heard many people hoping, oh, this is the alt season or alt summer, or this is crypto winter or whatever. It's still going on. There's really not. Bitcoin's up, but again, this is the same kind of theme. Bitcoin pulls everything a little bit on the way up, but on the way down, it gets slammed because there's just a race for the exits. And I guess it's becoming harder to really create ranges for the others, where I would still enter into Ethereum and Litecoin as a trade in reference to the Bitcoin relationship. But I feel like I keep saying that, and in Litecoin, it was 0.0066, then it was 0.0065, then it was 0.0064, and if you don't know what I'm talking about on the 0.00, there's 100 million Satoshis or 100 million units in one Bitcoin. If you have 100 million Satoshis, you have one Bitcoin. So Litecoin is 638,000 Satoshis. Ethereum is 2,040,000 Satoshis. Name like Dogecoin is 32 Satoshis. And they continue to not be able to catch up, and I guess it would be somewhat frustrating because I'm more of a relationship trader, and that's how I derive value. Something is cheap or expensive relative to A. Well, if this is going to be an industry, then people need to start moving from A to B. If they don't, it's going to be like the diamond industry. You're De Beers or you're no one. I don't know if they're 100% of it, but that's how I'm starting to, gold, there's a few large miners, but there's still a lot of small entities. Silver, many years ago, when it was devalued by the U.S., those miners essentially just went in with copper miners. Like, it's very rare to find a specific silver mine. Do they exist? Yes, but extremely rare. And I guess with all the talk that I've said many times about Bitcoin dominance, in theory right now, if 35% of the market is alts and 65% is Bitcoin, and all the alts went to go collect Bitcoin, it can't go higher than 50% in theory. Otherwise, you've margined out, and that's kind of against the whole purpose. Do I agree with that? No, because it constricts growth tremendously. Although the Bitcoin alpha team or cartel or leadership or key people, investors, they can continue to keep forking it and adding kind of a value to themselves, where I'm starting to have a very different view on cryptocurrency, which may not be as popular as some would like me to say, but those who own Bitcoin made a fortune on Bitcoin Cash, Satoshi Vision, Bitcoin Gold, and Bitcoin Diamond. And those just went into the Bitcoin family of forks kind of market cap, which is still near 70% on the bottom line and is still close to 90% on the top line. And there seems to be more projects chasing less Bitcoin because all these projects fund themselves now in, it was Ethereum 2 years ago. Now people can fund in Bitcoin. And that's kind of what we see on these huge run-ups. Investors, larger scale, putting some money to work. And the other is leverage guys, using futures and forcing the shorts out on the way up, or vice versa, shorts forcing longs down. But they're very creative in the way that things are levered, where there will be Ethereum futures on the CME, I believe, in January or February. So that will add, I guess, some liquidity to that marketplace, where it just opens up kind of swaps and other institutional things for the Goldmans and Morgans and Cities and so on. But I'd like to say that there's, I don't know. I guess you guys get the point. I'm kind of rambling, so I would pass the mic to anyone that wants to add something on that. But I truly feel that they being whoever runs, is the higher ups in the Bitcoin ownership or group or consortium, by continuing to fork that, it's not much different than how the whole system that this was kind of, or some would argue, is meant to get away from. I mean, printing money, okay, forking Bitcoin, and you have a key group, Davos versus, say, the Alpha team or something along those lines. And instead of QE or some very easy monetary policy, you can continue to fork. I mean, what would happen on the last day of Bitcoin's last coin being minted? It's like, oh, we're going to fork this and call it Bitcoin 2. Well, who would like that? Those that own it. Who would not? Those that don't. So I'm seeing a lot of parallels with things that many want cryptocurrency not to be, but they don't really want to talk about it yet because they're still in the ownership position of the largest one. So that's it for me. I'll pass the mic.
Sweets, I'm going to pick on you here.
I know some
Hello,
people
gang.
probably would wonder how is this guy kind of being negative when you just had a $700 rally off the lows. Well, Bitcoin's up 12% off the lows, but most other things are 3 or 4%. And then it'll drop and they'll go lower. And I don't know. We'll see. We'll see. I mean, I would like to see the all things not Bitcoin start to outperform on the upside, but time will tell. Tim, sorry for interrupting.
No problem. So there was a hypothesis on the seasonality of returns to coins during different phases of the month. And I went back to June 2017 and looked at the daily returns. I actually didn't exclude weekends yet, but I looked at the first 7 days, the middle of the month, and the last 7 days. Bitcoin makes about 0.6% on average on the first 7 days. It makes about 0.4% on the last 7 days, and it basically doesn't do anything on the middle of the month periods. So one thing that we've said, which totally corroborates Steve's hypothesis, and takes me back to, I think, a funny thing. Like, if there are those shows where like a billionaire has to start over without his money or his contacts, and SAC Capital had to start over with no like historical track record. As a non, he's a fabulous moneymaker, but as a non-quant, he would have a hard time getting a job in today's market, even though he's able to find these sorts of patterns. So I think a lot of times Coin Genius can go and search out and hunt down and put the numbers to a lot of these patterns. So that's interesting, and I will flesh that out and send it as a live update this evening.
So, Mr. Sweet, so that is why I know it's hard to see without my charts or my hypothesis and without Tim's at this moment, so I'll just mention it, but that's what Coin Genius brings, where I learn by doing. I'll look at something, plug it into an Excel spreadsheet on a very, very rudimentary level, see if it really works. Like that way it's not, well, I either lost or made based on my hypothesis. And in the past would have, a few people I could run it by. Then less so when I started doing this on my own for the family office, but meeting up with Christina and Coin Genius, this is the kind of value I think that we all add as a collaboration, where now Tim has numbers behind what my thoughts were. And I think those quantifiable numbers are what people want to see, not, well, I think it outperforms on the first 5 and last 5. I don't know if it's possible, Tim, to do the first 5, I guess, business days and see if that makes any difference.
Yeah, for sure.
Just for a comparison, but because I feel the weekends can easily, I thought this was going to happen last weekend or over the weekend to force everybody out on Friday and then get everybody, make all the institutional shorts cover into this week, into a thin market already, where it was a couple days delayed, it seems, but it's still within those last 5 days.
Hey, Steve, this is Jeremy. I just have a request.
Yeah.
So for the folks that are on the team that are traders like myself that don't have the time to do the analysis that you guys do, it might be interesting and actually be really helpful. Like if you know or have a strong indication that institutional players are going to start driving the market down for whatever reason, maybe we can put a channel together where you can give a heads up. It doesn't leave the room or the 4 walls of Coin Genius, but it gives our team a heads up. Because that would be tremendous knowledge to understand that something is coming without being blindsided, especially if that knowledge lives in our team. I'd love to be able to share that with the rest of the folks that trade.
Well, this was an interesting. Let me just pull up my calendar, and let's see. Okay, so
Sir,
the
you
last
might
five would have
also
been 1, 2, 3, 4, 5. So basically, the 22nd, 25th, 26th, 28th today, and then Friday, which is my birthday. I'll actually be 43 on Friday, which is scary. That I'm actually
Wow. Happy early birthday.
talking. That there's actually people listening to me on something called cryptocurrency. Like you can't see it, you can't touch it, but there's a market and there's value in it. So that still is kind of an amazing feat to me, considering I didn't know anything about it really 3 years ago. But I couldn't tell you ahead of time, Jeremy, and say, well, the last 5 days of December are going to be bearish or bullish until we got
Oh no, for sure.
a lot closer to it.
Yeah.
But I could tell you that, run up, and it I can start doing that, about a few days out, and I kind of, all right, I'll do that.
Yeah, no, I'm just saying, like, you made a statement like, hey, like I saw that this was probably coming. Obviously, no one's gonna ever hold you to it and say, like, Steve, you were wrong. Like, this is just more like internal insights just to help the family kind of thing. Just like on the same way,
Sure.
like if I saw something, I'd share it with the team as well. You know what I mean? But if you see something, you have a high degree of certainty that you feel like something might happen. Just a heads up would be awesome. And then also taking that to the second level, which is the more that we have like that and we put it on a specific channel. So Carl or Christina, if you can create a channel for that. So maybe it's like trading insights or something like that, internal trading insights. Then we could have some of our data scientists even look at that stuff over the long term and probably even develop models around that stuff, because that is a hypothesis, right?
I really would
So
like to keep that all in the notifications channel so that
no,
everything is in
that's separate.
notifications
That's
and you
separate.
can
So
decide
live
what goes
notification.
public and what doesn't go public. Because when it's happening in real
Okay.
time, it's important to keep it in one place.
Right. I guess I was trying to separate it because that's literally public and the other one is literally internal use only kind of thing. But I can see how there could be
And
crossover as well.
correct. And then you will decide what part of it goes public.
Sure. That's fine. Then we can just keep, all right. So Steve, just keep it in the live notification section and then we'll just post that
Sure.
whenever makes sense.
And
That'd be great.
I guess, the key part is just, I guess, bringing awareness to certain time periods more so than, now that Tim has empirical data and says, okay, over 2 years, Bitcoin averaged a 2% return a month, and 1% was, the first 7 days or 5 days were 1%. The last 7 were 1%. The middle, average 0. I think that type of info just puts it out there and the reason why our belief is because institutional redemptions and allocations are done at end and beginning, and in the middle you basically get investor A and investor B. Oh, it's going up, it's going down. Okay, well, one of you is right, one of you is wrong, and that's so. But yes, I'll start doing that, Jeremy.
Awesome. Thank you so much.
Beautiful.
For
Well, we only have
traders,
about 5 minutes left, so I want to turn it back over for market analysis. And then, Sweets, it sounds like you might have had something to jump in here.
yeah, quick thing. So one thing we've heard from the hedge fund people that we've talked to in the crypto space is that they are not in the buy and hold camp as much as they are the take very defined exposure camp. So I think that this kind of insight is valuable for those people who are looking to jump in and jump out. And it's also part of the service that you can access by going to coingenius.ai/consulting. People that reach out to us there can sort of tap into this research network to buttress their own internal efforts.
Hey, Tim, you
Nice
want to talk
plug
about
there,
that
Sweets. That's great. Thank you.
in terms of what the exchange was interested in, the customer segmentation, and talk about, because I think Steve could probably add to that as well, given the fact that he's done a lot of auditing of order books and things like that. It'd be really interesting to kind of collaborate on that.
I'm sorry, Jim. I could barely hear you. Could you repeat?
I'll take it up. I heard him. So we had a conversation with an exchange earlier this week that was interested in doing then having us help with their market making. So doing customer segmentation, doing very short-term forecasts of prices of the most liquid cryptos. So this exchange specializes in Bitcoin and Ethereum and Litecoin and a few others. So a more of the
Your
big
mega
cryptos.
caps, basically.
Yeah, exactly.
Okay. Are they out of Asia? Did we mention this before without saying the name, if I'm not mistaken?
They are in the
Okay.
in the Asia Pacific region. Yes.
Okay, gotcha. I think I recall I do recall the conversation now. How short term are we talking? Like a day, a minute, a week?
I think if we had sort of like a yield analysis on a minute by minute basis to give them an idea of whether they should be taking exposure or laying it off would be appealing to them.
Okay, I can do some research, but I would say for disclosure that I'm not, minute to minute and 5-minute charts is. I used to do 5-minute charts when I was, I guess, a very active manager, but let me take a look and I'll see what I can do. What time frame would you like to kind of reconvene this on so we could talk further?
So Steve, ask here. We're just giving feedback in terms of what we think could be valuable based on our conversation with this exchange specifically.
Sure.
But I will say that one of the reasons that we're bringing up this conversation is because, we want to show them what we can do. So if there's anything that you think would be really appealing to an exchange, we could send them as an example of things that we could help them to, obviously optimize their efforts, save money, or generate more alpha. Obviously, that's anything that they would be probably very interested in.
So they're an exchange, if I recall the conversation correctly, but they're also the market maker. Like they're taking the other side of, they're the key liquidity provider. Like obviously, customers can put in, but that's pretty much how many of these work. Where you can see that. I guess I showed you an example of a large coin market cap volume exchange where many people thought the volume was, I guess, less than value added. But I showed some people last week how at times when they see a large order coming in, there's quite a bit of liquidity there. And all the other flash, trades in between the spread, even the mighty Binance on CoinMarketCap's metric, I think they quote them as having $50 million of liquidity, but $1 billion of volume. So if the best exchange liquidity to volume is 5%, they're all trying to just create these flash trades to attract people because they want. So yeah, if we could be on the forefront of one of those, I mean, I've helped others, so yeah, I'm down.
That's great.
I would say.
I just noticed. Oh, go ahead.
I have a question for somebody that could. This is definitely a Coin Genius question. I was just thinking about how could you get a list of exchanges that run their API based off another? For instance, of many exchanges I look at run their API off of Binance. Like literally, I could pull up one screen and I could pull up Binance and it's tick for tick. Like the last trade, different volumes, but it's clear cut. I could, put it on at Best Buy on 10 or 20 screens and people be like, really? It should not be like that in a true market. Even in the old days of the Amex and Philex and NYSE, you would have slight price discrepancies, which eventually would get arbitraged out. But I believe it's Binance, just from me eyeballing it. If Tim or anyone for that matter would be able to quantify that, I don't know if that's something that exchanges even share. Like, yeah, we're basically a clone of Binance. Whether they are or they aren't, who knows? But I think people are copying the wrong exchange. You want me to go out there and say it? I mean, it was one of the first big ones. It was the first exchange, if I'm not mistaken, to kind of bring some notoriety to their token / coin. I think we can all agree that by market cap, the mighty Binance token has been in the top 10 and still is, and that has given them the extra capital to kind of become the leader. And let's be honest. So I'll do some research on that and reconvene with you guys. But I actually have to run right now. Holiday plans.
Hey, Steve.
So yes.
Hey, Steve, before you go, just for 1 second here, I just saw that I'm not sure how long he's been on. I wanted to introduce Samson Williams, who's on the call today, just so you can be familiarized with him. So Samson is coming on as one of our newest advisors. Tremendous experience in the space. And Samson, thanks for joining. Maybe if you could just do a quick 60-second intro or something like that for Steve, I'd love for him to get to know you a little bit more. So he knows what we're working with, especially as we get into our R&D calls on Fridays. Samson, you're on mute if you're trying to talk. Samson, you around? Can you hear us? Okay, maybe he had to step away. So, all right, Steve.
Nope, there I was. I'm sorry.
Oh, there he is. Okay, there we go.
As all things, I couldn't master my own Android phone. Sorry about that. And so, no, by training, I'm a cultural anthropologist. And so over the years, I've gotten a little bit more familiar with technology out of necessity. My greatest claim to fame was from 2008 to 2016. I was the emergency manager for Fannie Mae, doing mortgage shenanigans. So in 2008, they didn't know what they were doing. I didn't know what I was doing, but we spent the next 8 years figuring that out. And so in 2014, I got introduced to blockchain as a technology on the capital markets / mortgage operation side of things while at Fannie. Just bought some Bitcoin and went down that route. And I'm loving listening to this phone call. I've made some notes because Steve brought up a very interesting comment that people are copying the wrong exchange and talking about Binance. And so for me, if Steve, who's been in this space, feel that the humans are doing the wrong thing, I'm thinking, well, what makes people do that? And what are those reasons? What are those drivers? And if we can identify those, then it can give us some deeper insights to hear what the humans are thinking. Here's what's making them take this action. Can we get ahead of that? So I'm going to enjoy listening to these phone calls and learning.
So you were with Fannie Mae in 2008. That's a deeper dive discussion that I'd love to have, because I didn't know what CDOs and CDSs were until that year, and then you're like, what is that? I go,
yeah.
If you don't know, don't buy it, but I'm short it, so that tells you, because when I found out that 30 people may have a claim to the same house, it was like, wow, dude, that could get ugly quickly. But I think I'm glad to hear someone agree, publicly on. I don't know if they're wrong in copying Binance, but it still seems to be the exchange that be like, oh, Binance isn't number one in volume. This exchange is beating them. It's fake. Well, let me ask, how many of you rode a horse and buggy to your office or work or dinner today? Not a lot. But how many of you guys have not HD TVs? Not a lot. And then the human part, I always wonder this. Why do we eat hamburgers with our hands, but we eat steak with fork and knives? Why can we pick up a piece of bacon, but people cut sausage? You know, it's one of those gets your hand greasy, and I couldn't tell you. Not my area of expertise. And I think that if I had to take a guess, people, humans, we see someone doing something as, a baby. We're watching mom and dad use some utensil to eat, and they give us one, so we essentially mimic them. And the more people say, oh, Bitcoin's the best, Binance is the best, everything else is shit, well, it just starts to become someone's one-liner all of a sudden becomes a truth. And I see it on Discord and Twitter and many of the popular social media mediums, for lack of a better term, in this space where people accuse volume of being fake because of one report. Now, I'm not going to knock Bitwise publicly.
Steve, we're losing you.
Oh. Okay. How about now?
Thank you.
Okay. Yeah, I don't want to. I'm not too familiar with the entity that put the Bitwise report together, but I saw a lot of which volumes they deem fake. But how many exchanges did they look at? You're telling me what the top 10 are, but if I take a sample size of 10, those become the best 10 and the worst 10. I mean, right?
Well, and that was almost a year ago too. I mean, the data needs to be refreshed. And I would say to your point, I know you have to run, to your point of bacon and sausage. I don't know why it is, but I can tell you statistically that it's repeatable. And that's what CoinGenius is looking for, is those things that are statistically repeatable, that people tend to pick up bacon with their hands. That's all we're saying. That's right. We can't tell you why. It just happens to kind of work out that way.
All
Yeah,
right.
Steve.
Well, everyone, I got to, oh, sorry.
No,
Go ahead,
Steve, let
Sam.
me just tell you, I appreciate you bringing up the bacon and sausage thing, because it prompted my mind to write down another question of what are the learned behaviors in crypto trading?
There we go.
And so as I think about this, I think there's someone has been teaching people how to trade. And so what did they learn? What bad habits did they pick up? Because I think there's a way that can be analyzed and then quantified in a manner that can say, here's some of the learned behaviors, here's some of the myths and the legends of crypto trading, and this is how it impacts your customers, particularly if you're an exchange, because at the end of the day, I think CoinGenius wants to add value to its customers. So I have to think on this a little bit more, but Steve, thanks for bringing up the bacon and the sausage example.
Sure. And then everyone have a good Thanksgiving, and I will talk to you guys at noon on Friday.
Beautiful.
Sounds good.
Thanks,
Everybody else
Steve.
can hang on, Steve, if you want to drop off, but Samson will dive in a little bit deeper. Thanks, Steve. Have a happy Thanksgiving.
Bye, everyone.
Bye, Steve.
Happy holidays.
Take care,
And
Steve.
I know Steve is leaving, but I would like to announce that Mr. Nick Kearney has been able to join. I'm not sure if he can contribute, but always a pleasure to have him here.
Awesome. Hi, Nick. So while this is our first time with Samson, love to tell you a little bit more about our team, Samson, and so you can get familiarized with who's on the call. So Christina, if you want to just kick it off, Samson already knows who I am, and then we can maybe just go down the list. And then Samson, I'd love for you to dive into a little bit more about what you're doing, especially at the university level, and teaching folks about blockchain adoption and some of the things that you and I had chatted about.
Sure. Mine's pretty quick and easy. Christina Brujan, COO and co-founder, all things CoinGenius.
I can hop in next. I started doing operations and kind of still do operations, and then kind of making a shift into marketing. Personally, I got in the space, I want to say 3.5 years ago now, mining and just kind of a tech nerd, and yeah, just kind of grown from there.
Cool.
Hey, Samson, I'm Tim. I'm a futures trader, algorithmic futures trader by background, and have started to apply some of that same research methodologies to the crypto space. One of the things that we talk about is that the roadmap of how the traditional capital markets were developed is now well known, and the technology stacks are available, but we need to cover that ground in the crypto space, at least on an analog fashion. So I see that as part of our roadmap.
And just to toot his horn a little bit more, on our website right now, some of those indicators that you see that are proprietary to us at the top, the gauges. Tim was the creator of the Fear and Greed Index, Volatility Index, and the Bull versus Bear Index, and has some really interesting methodologies for creating those. And we're just really scratching the surface. So really excited to see what he can do over time. Nick, are you able to talk? I'll take that as a no. That's fine. It looks like Tim Bogert also just joined us. So Tim, would you like to make your introduction to Mr. Samson?
Absolutely. Tim Bogert came on board about 1.5 years ago. Originally was trading options and realized the crypto market, thinking I was a little bit late. This was about 2.5, 3 years ago. Got involved, got some training, became a certified blockchain and cryptocurrency expert through the blockchain institution. Started getting my way into the space, trying to find a home. Found Jeremy and Christina. Been working on business development. I'm currently the CRO for the company, involved in everything regarding pulling funding in, monetizing our various platforms and our offerings, and really excited about what we're doing and where we're going.
Nice.
Awesome. So I know Nick can't talk, but Nick is basically our head of UI UX. So anything from a design perspective, he puts together. Currently working at Taco Bell as well. So all the cool stuff that they're doing over there, he's mainly the creator of all that and the mobile experiences. So really incredible guy, and knows a tremendous amount about crypto. Got in pretty early as well. So really well-rounded team. This is just a few of us. There is a vast team behind us of other data scientists, mathematicians, and folks that are just really excited about what we're doing. So excited for you to meet them. But Samson, if you want to dive in a little bit deeper and maybe reiterate some of the things you said for the new folks on the phone, that'd be great.
Cool. So again, my name is Samson Williams. By training, I'm a cultural anthropologist. I've had a really weird career, from working at Department of Children and Families and Economic Self-Sufficiency, which means food stamps, TANF, et cetera, to being an epidemiologist for the state of Florida, to spending 8 years at Fannie Mae as their emergency manager while they were in crisis. Most recently, I created a program in 2018 for the University of New Hampshire School of Law called Blockchain, Cryptocurrencies, and the Law. And that was just so that startups wouldn't have to pay lawyers $500 to $800 an hour for on-the-job training to understand what are blockchains, what are cryptocurrencies, what is money laundering, and that it still applies mostly to the banks. That program has actually opened up a wide variety of doors for us. I initially started at the London School of Business and Finance, creating a program for understanding blockchain and fintech, which we run out of Dubai. Then that brought us to the University of New Hampshire. They're top 5 IP school, intellectual property, because in the decentralized space, it turns out people still want to own their IP. And so housing our blockchain program within the IP department gives us some really interesting insights into what is the future of ownership in a decentralized space. Also started teaching last summer for Columbia University, both at their graduate level school, but they have a high school as well. And so I'm far more interested in the high school because the kids get it. They get digital currencies, they get digital assets, commodities, and securities. They're just so much more faster on the adoption level. When I say the kids, they're high schoolers, 9th to 12th grade. And there's just there's more people who are in high school than there are Ivy League school. So that's really fun and exciting to work with those kids, because those are our pipeline of future customers. And they're going to be the population who's really adopting and innovating blockchain as a technology and cryptocurrencies as a whole. Through education, we've particularly through the University of New Hampshire, we've been able to have people like Hester Pierce from the SEC, the commissioner of the SEC, come and speak to our students. Caitlin Long from Wyoming, Brian Bracken, who does AI and blockchain. So we've been able to reach out to many of these industry experts, because I'm based here in Washington, D.C. And when I'm not teaching, I'm advising a few folks here and on the Hill, because at the end of the day, you can come up with the greatest tech in the world. If there's not the policies and the regulatory landscape to implement it, you're just going to waste a lot of money. And so it's interesting to see as we shift past the R&D and hype of just blockchain and cryptocurrencies into the business of blockchain and the steadfast frameworks for cryptocurrencies and all things decentralized, that more and more people are moving, or more and more businesses are coming to Washington, D.C. So we have a few shops here, from Coin Center to Blockchain Institute to Digital Chambers of Commerce. Block One just opened up an office in Arlington, which is right across the river. So DC is going to play a more prominent role in just blockchain and cryptocurrency adoption than it did in the first 3 years. And many people and many projects aren't prepared for that. I think one of the things that is most interesting, when I was talking to Tezos on the policy side, they're interested in the tax implications for proof of work versus proof of stake mining. And so basically, right now, that if you're mining on the Tezos protocol, you're going to have a taxable event basically every other day. And so they're looking at specifically how are they going to address this tax policy, or the tax policy regarding cryptocurrency mining, which we really don't have in the US. So again, this is where the policy folks on the Hill, they need some education around what's happening in the space, around what are these actual financial products that are being developed and how they work and how they function, so that we can write better, more friendly rules and regulations around that. I think that's really about it. I think I came across Coin Genius, or rather Coin Genius came across me because I was on the Bad Crypto podcast talking about equity crowdfunding. And so I'm on the board of the Crowdfunding Professionals Association, and they're supporters of the Jobs Act, which stands for Jumpstarts Our Businesses and Startups, which was written into law in 2012, actually signed into law 2016. And equity crowdfunding allows retail investors, non-accredited investors, to invest in startups and businesses. And I think that crowdfunding is the future when you look at how in the ICO craze of 2016 to 2018, it demonstrated that retail investors wanted to invest in different projects, even if they didn't know what they were. And so as we come back to that regulatory framework, those regulatory sandboxes, and those regulated businesses, there'll be a space where people use Reg CF, where you can raise up to $1 million for your startup to start launching their projects, and eventually go on to Reg A and Reg D raises, which have higher raise amounts. And the reason this is important in the blockchain and cryptocurrency space is that I believe the future is tokenized, meaning commodities. And so you'll have a place where you go to buy, you'll go on Amazon, and you'll go on Amazon, and much like you might buy a bag of gummy bears from Haribo, they cost $5. They'll ask you, hey, do you want to also purchase $5 worth of Haribo stock? So Amazon is that platform, which is registered with FINRA. And for them, you're just adding another product into your cart because they already have the know your customer checks built into the platform. So that's on the retail side. You'll see something very similar on the commodity sides, where the buying, selling, and trading of commodities will be made even simpler, probably done on your phone with the voice assistant, meaning, hey, Alexa, hey, Google, what are we buying today? So I think that's it in a nutshell.
That's awesome. Thank you so much for that. Any thoughts or questions from anybody around some of the stuff Samson said?
That's the future I want to live in.
Yeah.
Yep.
My thought is that's awesome.
And for the record, I'm a big fan of Dogecoin, and so if I make Doge jokes, I tell people I accept Doge on a one-to-one basis with dollars and Bitcoin.
Nice. Very cool. Nice. Well, I don't know if anybody has anything else. I mean, Samson, typically Genius Wednesdays, we're talking about obviously the current state of the market, what's going on. Obviously, this is a very interesting time in the sense that there's been a lot of volatility. You heard Steve's take and Tim's take. But maybe, from your perspective, love to hear your thoughts in terms of where you think things are at today. What's causing a lot of the volatility, or maybe some of the things that you're seeing from like a macro perspective around the hill that, might be impacting the volatility of the industry at this moment.
I think it's from the Hill. The Hill is all distracted at the moment on Twitter with the impeachment. So if you were waiting for something to move through the Hill, it's not going to happen. It probably won't happen until Q3 of 2020, only because of just getting any bipartisan cooperation on different financial bills is almost impossible. So that's like just the overall economy. In terms of the cryptocurrency market, I've got myself some notes here because I'm a big fan of what the anthropologists call narrative economics. And that's just how stories help things go viral and drive major economic events. And so right now I feel the faith of the faith of the Bitcoin faithful is waning, only because they're focused on realizing cash value, are turning their actual value into presents and gifts so they can spend time with their families. And so my friends, they've been liquidating their different cryptocurrencies so that they can go buy gifts, particularly for Black Friday and in preparation for Christmas. And so I think that I think that this will be interesting as we can look over the holiday cycles to see that, hey, come November, come Black Friday, Cyber Monday, come these holiday sales, are people liquidating their crypto positions to go spend cash at different retail stores? So we'll see, because I get the sense that my friends they're selling so they can go buy stuff.
Interesting.
Yeah, that just means we need, because if retailers were accepting different cryptos, particularly Dogecoin, you wouldn't see people liquidating to go buy, things off of Amazon.
I think it's unfortunate that they're liquidating right now when prices are arguably at lows. That's exactly the time I'd be recommending a hodl.
Mm. Well, I tell people you can't have a liquidity event until you have a liquidity event. So, you should do what's in your best interest. Sometimes you got to buy your significant other a gift, and that's more important than the price at the moment.
Understood.
Yeah.
Very cool. Anybody else have any thoughts about the market or any questions that they have? Otherwise, we can start wrapping up here.
I just have a quick comment. I got a note over the weekend or over the last few days from one of the regular contributors, and basically kind of just saying, okay, so it hit 65 like we said it was going to, bounce back up, and then it's like still in the trajectory of the cash hodl and everything else that we were seeing for the last few weeks. So I don't see anything really surprising in all of the analysis that we've kind of led up to. This is pretty much what we anticipated. So it's interesting to me to see it play out.
Yeah, no, it really is. The other interesting fact is, if you've looked at these types of cycles in the past, what you typically see is that the people that are, kind of controlling the markets right now, it's almost like it's so easy for them because they, push the price down 1,000, they push it back up to get people excited again. People get back in, they drop it again. It seems like they do this like 3, 4, 5 times. And it's almost just funny for them, right? Because it's almost like taking candy from a baby. that's to me how I take it as I see these price movements, $1,000 up and down, because obviously they have information that we don't. They have the capital. You see even whale alerts, the thing that we track to be able to understand large movements of capital in and out of Bitcoin or other assets from exchanges to independent wallets that are unidentified. It's really interesting to see those moves, and as soon as you see some that come on to the exchanges in excess of 10 million, 20 million, $100 million, which you've seen a few of those moves recently. I mean, you almost see the immediate impact of that price. So it's pretty interesting. So there's Samson, we're tracking a lot of different factors, right? So anything from, as I've told you before, things that are more on the technical side of things, and looking at the technical indicators, which you see like Steve's doing a lot of, and also doing a lot of correlation analysis. You see some of that on our website, but our team also does a lot of that with commodities. We see things tracking, they're tightly coupled, and then all of a sudden they decouple. Looking at things like blockchain developer activity to understand as Christina calls them, the longevity indicators of particular projects to see, like, are they actually going to be around? Does the price, variance at this moment even matter? Or should we really be focused more on the long term because there's 2 developers left on this project, they're going down and they're developing nothing? To the sentiment analysis of social media channels from, the Telegrams of the world to the Twitter and, Facebook, Instagram, and then also in the news. So there's so many different signals that we're analyzing on any given day, just trying to ascertain what people are thinking, because the emotional side of things is obviously very indicative of the future if you can get ahead of it. The hard part is sorting through obviously all the noise and the bots and the people trying to impact the market in a malicious way. So anyway, with all that said, just wanted to give you an idea of what we're looking at, some of the factors that we're taking into account, and the repository of data that we're creating on the back end to help build out our machine learning models.
Nice.
Yeah. And then the one comment I was going to say too, in line with that, Jeremy, was the whole bottom kind of being 6,400 ish is kind of the culmination of the bull market from 2015, as it lines on a logarithmic scale, and with a linear support line, it goes all the way through up to the 6,400 mark. And I'm pretty sure that made it around the crypto Twitter space and the retail investors' eyes enough so that if you're an institutional investor, you don't really go down that far, you front run it and screw everyone over. And so I think that's kind of that's kind of what they do, and that's kind of what's being done. And so you have these people like, oh no, it'll definitely go back down to this this mother of all support to be in a bullish market for the last 4 years. But I'm inclined to think that it won't, but who knows?
Samson, it's nice to meet you. My name's Nick. Really
Hey, Nick.
excited to have you on the team. When you first said that your background's in anthropology, oh man, I got super excited, because that's an element that people don't always bring to the table when we're talking about money and finance and stuff. But as a UX designer and experienced designer, I mean, the psychology of people, understanding like the background of people, why they do things, and what the situation they're in. I think this is a great add to the team, Jeremy, especially for perspective on why people, especially using our platform, because we have to understand. So it's super exciting to have you on board. I like to enjoy listening to you talk. I think you just left.
No, I'm still here. No, I like to tell people that humans are only customers until AIs take over. So when we talk about your user interfaces, it's so important, particularly if you're trying to get into a new segment of the market who's never traded before.
Yeah.
So how do you make it as seamless for them or easy for them?
Well, bringing it past that first dimension of trading, and that's just a straight interaction where we present you something and you use what we present to do whatever you want with. But if we can take it to the next dimension, the second dimension of trading, where it's more of an interaction, where there's feedback and back and forth between the person using the platform and the interface itself, to the point where the interface is alive and it's custom and personal, and the AI is taking over and helping you in ways we haven't foreseen yet.
Yeah. Also, this from a side note, if your business if you're not a platform business, meaning people can engage with each other on your platform, you're gonna have a really tough time being relevant, because humans, it's like going to conferences. I only go to conferences to meet other humans. I call it sniffing butts. So we're like dogs at a dog park. We go to sniff other people's butts, see if they're real. Because particularly when we do business in Dubai and Saudi Arabia, until they shake your hand and you have tea 10 times, they're never going to give you any money.
Right.
So it'll be interesting to see how the space continues to develop as everyone is
That's
like,
a really good point that you brought up. It's more than a platform that people are engaging with too, especially in 2019. There's cell phones, there's the cloud, there's all these different mediums in which people could connect to. And in fact, like it's in your pocket now. So it's a whole different platform than what people are used to logging on to their dashboard or their admin panel or into their E-Trade accounts. It's with you all the time. We're pushing out notifications. It's in your pocket. You can go to our website. You know, it's 24/7 thing too. So our platform can't sleep.
Yeah,
That's
and
good.
you're also competing for their attention in general. And so how does CoinGenius become one of their, what I've done recently is I've set timers on my social media apps. So it times out after 30 minutes. So I don't spend too much time on LinkedIn and Instagram and Twitter.
Oh, no, it's horrible for you.
Yeah.
The new iOS tells you how much time you spend on each of them, and all my friends are sitting around the room. They're going, I only did 3 hours today. Oh, I was under 2 hours today. I looked at mine. I was like, 57 seconds. Get your life, people.
It's like, where does CoinGenius pay? How much attention are people paying to CoinGenius in their social media?
To the person part, it's the ego. Right. And it's not the ego like I'm so popular, I'm so great. It's the ego like it's self-consuming. Right. And how do we cater where people are as a whole in society right now, too? It's that thinking, how do I make money? Like, what's good for me? You know, you're right.
So I know we have to end the call, but Samson, I'll end with along the lines of what you're saying. The plan moving forward, especially as we bring on more capital and hopefully close out our seed round here at $3 million, we're going to be able to do a heck of a lot more and bringing people on that are on the call right now full time, like Nick. But the way that we're going to differentiate ourselves and the way in which we're going to kind of create that release of dopamine as somebody comes on our site, make it an addictive experience similar to that of like Blockfolio. You swipe down, you see your balances change. Like that's what we're looking for. That's what we're trying to build. And we're going to do that through a customized experience. So we realize that each person in this industry really only cares about the coins that they either hold or the ones that they're looking at deploying capital into. Everything else doesn't really matter. You can give a high level overview, a global page, give global implications and correlations to other industries and other markets. That's fine. But what they really want to see is what they care about. So our goal is to silence the noise or hit the mute button, as we say in some of our pitches, on everything else, and you're only being delivered the information that you want, that you care about, in whatever mechanism that makes sense for you based on the medium, whether it's SMS, which we have notifications that go out, you want to get desktop notifications, emails, doesn't matter, we'll cater to you depending on obviously your level of sophistication as a trader. So that's what we're building, and then taking it to the next level, enabling the community aspect to it. And Nick, this is another call, but some of the plans that Nick has for this platform and the media section and kind of making us all Twitter famous, as he calls it, is a pretty interesting next step. So yeah, I think we're right in line with that. And we'd love to kind of work with you as we evolve the platform to talk about the human psychological aspects of that and how we can really appeal to people and get this to be an addictive experience.
Cool.
Awesome. Well, thank you everybody for joining. Thanks again, Samson. Welcome to Genius Wednesdays and to CoinGenius. Really excited to work with you, and look forward to speaking with you all again soon. Everybody have a happy Thanksgiving.
Yep. Happy Thanksgiving, everybody.
Thank you, guys.
Bye-bye.
Thanks, guys.
Bye, everybody.
Bye.